Here's a quick question for you. Should you buy or should you rent? It's a question all of us have asked ourselves at some time, and here's somebody with some answers. Jeannine Henrion of Group 1 Mortgage, thanks for being here on South Florida Real Estate Update. So, should I buy or should I rent?
Well, that's a great question, Curt. And I went online and did a little snooping around to see what I could buy a home for and what it would cost me to rent that same home. I picked a lovely little neighborhood in West Palm Beach, and I could rent in that neighborhood a darling 3-2 for $2,800 a month.
$2,800 a month.
Correct. That same home I could buy for $250,000. So if I were to put only 5% down, because I think coming up with a large down payment is what makes a lot of people think they have to continue to rent. So if you only put down 5%, your principal, interest, taxes, insurance, there were some HOAs in this community, and a little bit of mortgage insurance, that total housing expense added up to $1,925. It was an $875 savings per month to buy instead of rent.
And that down payment may not be that much more than first, last, and deposit.
Correct. You almost can't afford not to check into buying.
I think some people have been reading headlines, though, that say the requirements for a mortgage have really gotten tight and it's difficult to get one. What would you say?
You know, it's not as difficult as a lot of people think. Like I mentioned in that comparative scenario, we can do conventional loans with 5% down. FHA, which are government-insured loans, allows for only 3.5% down, and USDA and VA loans require no down payment.
That's good. What are the requirements then?
Well, if your credit shows that you have an inclination to pay your bills and you can document that you have the ability to pay, chances are we can make you a homeowner.
So many people, though, have gone through short sales or foreclosures. What kind of impact is that going to have?
Well, it's true. A lot of people have been through difficult times. The FHA loan requirements for seasoning on a foreclosure or short sale is 3 years. For VA, a lot of investors are looking for, 2 years since that unfortunate economic event. And even on conventional loans, if you put 20% down, and we can draw an automated approval, that's when we upload it to Fannie Mae or Freddie Mac, who are our leaders in the purchasing of mortgage-backed securities. If we can draw an automated approval for them, chances are we can make you a homeowner after 2 years in a conventional loan as well.
And that 2 or 3 year waiting period is the time to build up cash for a down payment.
It gives you an opportunity to save cash, get your feet firmly back on the ground, have that reflected in your credit, and just recover from whatever the economic circumstance was.
So how do you know if you qualify for all of this? Call you?
Absolutely. Absolutely, Curt. It is my pleasure to talk to anybody who is interested in home ownership, get them pre-approved, and if they're not quite ready for home ownership now, I'm happy to be a partner in making sure you're doing the things you need to do to get to that place.
Jeannine Henrion of Group 1 Mortgage, thanks for being here on South Florida Real Estate Update.
My pleasure, Curt.